If there's one financial sector that clearly reflected the struggles the Nigerian economy grappled with last year, it's the country's stock market. With the country's forex earnings dropping sharply because of low oil prices and crisis in its oil-rich Niger Delta and the local currency taking a plunge, foreign portfolio investors were the first to take a flight from the market, dumping their stocks. All the major index eventually went into a steep decline, and the market wrapped up 2016 on a negative note. Equities lost 6.2%. Chief Executive of the exchange, Oscar Onyema, told this gathering of journalists and investment experts that in dollar terms, stocks fell by 40% as the local currency weakened sharply.
Capital markets tend to act as barometers of any economy, and in Nigeria's case, the prolonged economic downturn directly impacted an array of products and asset classes on the Nigerian stock exchange. The NSE industrial average recorded the steepest drop of the year at 26.37%, a result of severe difficulties faced by companies in accessing capital for imported raw materials.
As bad as things may look, the 2016 contractions, unlike those of 2014 and 2015, was a single-digit decline, fueling hope of a quick recovery in 2017.
In the immediate future, the NSE will focus on achieving its goal of becoming a more agile and demutualized exchange, and will fast-track efforts towards developing innovative products such as exchange-traded derivatives to provide investors with tools to better weather economic realities in 2017. We intend to strengthen our thought leadership efforts with policymakers to drive policies that will free up the system and promote the ease of doing business in Nigeria.
Market watchers say the uncertainty built around forex availability, monetary policies coupled with tough fiscal policies in the year further weaken investors' confidence in the equities market, and that they must be addressed to win back investors' confidence and get the stock market firing on all cylinders.
We believe that whatever is going to happen in 2017, regardless of the initiatives that have been put in place by the exchange to encourage participation, we are not going to see a major upturn in market activities if we do not address our exchange rate policy, sadly.
If investors see that Nigeria is going to be earning more from dollars, what it means is that our FX situation will not be as bad as it was. It gives them comfort to bring in their own money, to even add to what we have. So that is the angle at which I want to look at it from.
With most of the forecasts we have had so far saying Nigeria will come out of recession and bounce back to growth this year, managers of the Nigerian Stock Exchange say that would have a direct impact on the market and put it on the path of growth as well. One other very good news for the country is that we're beginning to see oil price go up gradually, and then there's quiet in the country's oil-rich Niger Delta region. Now, if things continued along that trajectory, the country will be on track to fixing its forex challenge, and that, of course, would have ripple effects, not just in the stock market, but in the economy as a whole. Deji Badmus, CGTN, Lagos, Nigeria.